Okay. Yes, ma'am. Jess, can you do the lights, please? Okay, Harris Fabrics computes its predetermined overhead rate annually on the basis of direct labor hours at the beginning of the year. It estimates that 20,000 direct labor hours would be required for the period's estimated level of production. And they estimated 94 grand of fixed overhead and variable overhead of $2 per direct labor hour. Their actual overhead for the period was $123,900, and the actual direct labor hours were 21,000, and they want you to compute the predetermined overhead rate for the year. What's the calculation? I guess I'll just start here with Jess, and then we'll go around. What's the calculation for predetermined overhead rate? What divided by what? So only inventories have beginning and ending balances? That's okay. I'll just keep going. Perry, what's the calculation for predetermined overhead rate? What divided by what?
You have to take your manufacturing overhead divided by the difference between labor hours and
Close. Brian.
Estimated manufacturing overhead divided by estimated driver.
That's it. You've got to take your estimated overhead divided by your estimated driver. And your answer has to be quoted as what, Sarah? Something?
It has to be predetermined.
That's right. So I say I get $2. Is that an answer? $2?
No, it has to be, because your direct labor has to be $2.
You have to tell me what the activity driver is. $2 per machine hour, $2 per mile, right? Okay, Jeannie, what'd you get?
I got $6.70 per direct labor hour.
Per direct labor hour. Good. Is this what you just said?
Yes,
Okay, $6.70. What did they do here? They broke up the fixed and the manufacturing, or the fixed and the variable. So you had to put it together to estimate what total overhead was. Right? Gretchen, give me an example of fixed overhead. Absolutely, the rent on your warehouse, your factory. What's an example, Caleb, of variable overhead?
Labor.
That's not what kind of labor.
Like depending on how much someone works.
Okay, but there's two. We've got basically we break our labor down into what and what? Direct and indirect. So an example of variable overhead is indirect labor, because direct labor goes straight into what? WIP, right? Okay, so Luth and Company uses a predetermined overhead rate of $23.40 per direct labor hour. This predetermined rate was based on a cost formula that estimated $257,400 of total manufacturing overhead for an estimated activity level of 11,000. So they're actually giving you the calculation, aren't they, by which they determine the 2340. Then they incurred actual overhead costs of $249 on 10,800 of total direct labor hours. Determine the amount of manufacturing overhead that would have been applied to the jobs during the period. How are they going to do that?
the actual labor
That's all there is to it. What did you come up with? Good. I'd like everybody now to make a quick journal entry to close out the overhead account. Set up your T account and close out your overhead account. I were you and I set up my overhead account, I would immediately write in what side I think actual goes on, what side I think applied goes on, plug the numbers in, and close it out. Was that actual or applied?
That's actual.
No, 249.
249 is actual.
So you should be able to do that pretty quickly. You know where actual is, you know where applied is, you just plug the numbers in and say, what was the ending balance? Have I over or under applied? Over applied. My applied is more than my actual. I've got to close it out to cause, don't I? Do we use hours in accounts results? We use the hours, the actual hours, to apply the overhead to the job. Is it one job or a whole bunch of jobs? Well, that was probably a whole bunch of jobs. I applied 8 hours to this job, and 7 hours to that job, and 36 hours to this job, depending upon how big or little it was, right? Yes, ma'am. So my ending balance, oh, wait, gosh, is it? Oh, it is. My bad, thank you. Whoop. Whoop. Wait, just a second, let's look at this. So the ending balance is a credit. Yeah, okay, thanks. So, yeah, so what am I doing? Overhead's a debit. Thank you, Sherry. Right? So then when I post this in, what's the balance in my overhead account? Which is what you've always got to bring it to. Thank you. Where am I? Okay. Melanie, 3-4. We've got some transactions and they want us to record them in journal entry form. Larned Corporation recorded the following transactions. The first thing that happened was they purchased $80,000 of raw materials on account. What's your debit and what's your credit? Good. Tirsa, the next thing that happens is I requisition some materials, 71,000 in total, 62 of that was direct materials. Okay. Go ahead, sorry. Okay, what kind of account is raw materials? What kind of account is raw materials? It's a current asset, and I don't like that they don't write the word inventory up here. Put the word inventory. Why is that helpful? Because you know it's a balance sheet account. Okay, so I want you to put inventory. Debit raw materials inventory for 80 grand, credit raw materials inventory for 71. So if I ask you at any point in time what's sitting on your balance sheet, you can go look at your 3 inventory accounts. Raw materials plus, what are your 3 inventory accounts? Plus what? Plus WIP plus finished goods, that's it. So at any point in time, you would just drop 3 T accounts and pull those 3 numbers out. That's what's sitting on my balance sheet. Okay. C, yeah, just a second. Can you read C, please?
Total labor wages of $140,000 was required. Of this amount, $101,000 was direct labor and the remainder.
Okay, again, key, you guys. Why is it split up between WIP and overhead? Okay, so explain to me what that means. Why does it not just all go into WIP? Exactly, that's exactly the right answer. The 101 is direct labor that's traceable to a particular job. The 11 isn't traceable. It's the cost of my supervisor, my maintenance guy, and my training gal. So that's got to be spread amongst all the jobs. How do I spread overhead between jobs? I average it and apply it, exactly. That's why I have the predetermined overhead rate, is I estimate it and apply it to jobs equally. Because my overhead bills come in how? Do they come in a linear fashion? No, they're like this. That's why I've got to estimate it and try and equalize it out, right? Okay, do you feel like you're starting to understand why we do this? So what are you going to have accumulated in WIP at the end of the job? Good. Your traceable expenses plus your... Good. You're going to have actual direct materials, actual direct labor, and applied overhead. So it's really going to be the cost basis of your product, isn't it? Then you move that amount into finished goods. Okay, wages payable, salaries payable, I don't care what you call this. What if I'd also told you in number C that I paid my advertising staff and I paid my sales staff? You'd have 2 more debits. What would they look like? Sales what? Sales, salary, expense. And you got to have the word expense because that tells me you know that what? It's a what? It's a debit account, but also it's a what? Period or product cost? It's a period cost, and it's going straight to my P&L. Very good. Right? So you've got to have the word expense. Do not, and I will tell you, you'll all sit here and smile and nod, and statistically, 20% of you are going to come in on the test on Monday and throw accounts up on these journal entries that we've never, ever talked about, dreamt of, looked at. These are your accounts. You cannot make up other accounts. Can't do it. This is not a creative class. Take ceramics. These are your accounts. That's all you use. Can we trade it out? We'll do it right now. Yes, I want you to fill something in. Is this an account? No. So tell me, can you read just for me what D says then?
Additional manufacturing overhead costs of $175,000.
Okay, great. Like what?
It doesn't say.
Okay, well, give me some I'm going to give you some examples. 20,000 of that was depreciation on my factory equipment. What's my credit? 20,000 of that was depreciation. Accumulated depreciation, AD. What kind of account is AD? It's a contra asset. It shows up on your balance sheet in what section? No. No. It goes against what? It's a contra asset that goes against.
Goes against the particular asset.
Yeah, what kind of asset? A current asset?
No, probably not.
A long-term asset. Goes against a long-term asset. Factory equipment. Not a trick question. Okay. Another 100,000 of that were just invoices that I got. AP.
If we would have done MOH 175, account payable,
Sure.
that's what I did.
The other 20. The other 55,000 is insurance that I had previously prepaid for a year. We're going right into prepaid insurance, which is what kind of account again? Current asset. Very good. I will tell you where to put it. We're not. There's no such thing as various accounts.
It covered a lot of fees.
It did. 3-6, schedule of cost of goods manufactured, schedule of cost of goods sold.
We need to know the schedule, like memorize really good on Monday.
You need to know what's in a cost of goods manufactured, absolutely, because that's a key number that comes onto your P&L, right? How does it come onto your P&L? Is it an account called cost of goods manufactured? No, it's a what?
Cost of goods sold.
Well,
Cost of goods sold.
it's a part of cost of goods sold. That's your model for COGS.
Beginning inventory.
What kind of inventory?
Finished.
Finished goods. Plus,
Cost of manufacturing.
minus,
Ending finished.
that's it. And really, you guys, I know this looks like a big, long schedule, but what are the three things that go into your cost of manufacturing?
Direct material.
Actual direct materials,
Direct material.
actual direct labor, and applied overhead. That's it. That's your schedule right there. Actual direct materials plus actual direct labor plus applied overhead. Plus beginning with minus ending with. I mean, that is your cost of goods manufactured. The only thing that's remotely challenging is going and doing that little sub-schedule of materials, which is the same thing again. Beginning balance plus purchases minus ending balance minus whatever indirect materials went into applied overhead or went into actual overhead. So really, it's the same thing again and again and again. Beginning balance plus purchases minus ending. Beginning balance plus purchases minus ending. Except for I'm not purchasing here, I'm making it.
And then on this, you have to adjust or over or under, apply.
Yes. What number are we on? 6? So they give us a bunch of information. Actual materials plus actual labor plus applied overhead. Add beginning with, subtract ending with, and that's that. 155,000. It really isn't a crazy model you have to memorize. You know this. Actual direct materials plus actual direct labor plus applied overhead. Plus beginning with, minus ending with. The only tricky thing is you've got to pull out your indirect materials. Why? I'm sorry. Go ahead. Those indirect materials, when I requisitioned all the indirect materials, what was my debit? Yes, when I requisition indirect materials, does it go into WIP or overhead? Overhead. So what am I really saying? That the raw materials account has got what kinds of materials in it? Both, right? So if I'm trying to back into direct materials that went into my production this month, I can't include indirect materials because they're a part of my overhead. Does that make sense? And really, once you get that 155, you guys, you're using the same model you've used since week 4 of accounting 1. Beginning balances plus cost of goods manufactured minus ending balance, but now we have to specify it's finished goods. And you've got the one, this is really the only 2 tricky things on here is that indirect materials we just looked at, and then don't forget on your COGS to add or subtract under or over applied overhead. How's that for a mouthful?
So on here, if we had laid this out, like for me, it was a little easier under something that I overhead to just subtract these for
Well, it matters from an accounting standpoint. Wait, I guess
make a separate line for it.
we did make a separate line, didn't we?
Right. I just didn't put it at above with direct material.
No, it has to be in there because, no, because it's not, you're trying to say, what does that 19,000 represent? Your direct materials, and you don't have that number. You've got 21,000. Again, keeping in mind, I have 75 minutes to test you on 3 chapters. So can we do all this? Brian, yeah. I've taken your test, yep. No, we can't. I can't possibly test you on all this in 75 minutes. Because all we're looking at today is chapter 3. We haven't even looked at chapters 1 and 2. I mean, we have, but not today. No. The review's harder than the test. The review takes you as it tests the content at a level up here. I can't test you on that in 75 minutes if I want anybody sitting here on Wednesday. Okay. So, I mean, just kind of keep it in perspective. But with that said, study hard. 3-7, Osborne Manufacturing uses a predetermined overhead rate of $18.20 per direct labor hour. It's based on a cost formula, and they give us the estimated activity base and the estimated overhead. And then they had actual overhead at $215, and they actually worked 11,500 hours. And they want you to figure out the under or over applied overhead. When you see a question like that on the test, what's the first thing you set up? T account. And that is going to be the thing, you guys. You cannot be spinning your wheels like, oh my God, oh my God, oh my God, what do I do next? It's like, I look at that, I know I've got to set up a T account. And I write in actual, and I write in applied on the left and the right side, and I get my numbers in there. And then if you're me, you get the wrong balance. But you're not going to do that. You're going to calculate the correct balance on the debit or credit side. And it looks like, sure. So help me out, Gretchen. What goes on the debit side and what goes on the credit side? Yep. Okay. What is my actual overhead in this case? Anyway. 209 even? 209, 300. Is that right?
Yes.
You guys, simple question.
215.
Problem 37.
Actual overhead, 215. Applied overhead is calculated as what times what? Direct labor hours. What kind of direct labor hours? Actual or estimated? The only time we use the estimate show is when we calculate the predetermined overhead rate, before the year even starts. Did everybody hear that? The only time you use that estimated hours number, you guys, is before you even start the year to do that predetermined overhead rate count. And then forget about it, because that was just an estimate. Now I'm actually applying overhead to my jobs. I need to take my actual direct labor hours times what? Times that rate. Predetermined rate. What were my actual hours? 11.5.
Yeah.
Uh-huh, and what's my rate? So I'm guessing, Jordan, this is the number you were giving me. What's my applied overhead then?
It's $80.20.
Okay. What's my applied overhead then in total? 2093? Yes? So 5,700 balance on my debit or credit side? Really? So this is bigger than this. So my ending balance is over here. Right? Everyone with me? So did I over or under apply overhead? Yes. I really have to think about this every single stinking time. And that's why I still have to write down actual and applied every time I set up this T account, because it's just not intuitive to me. And then it says close it out to COGS. What effect would that have on the gross margin? Interesting question. So let's do the journal entry and then see what we think. How, let's see. Hannah, how would you close that out? I've got a $5,700 balance I need to get rid of. What do I want to debit? What do I want to credit? I'm sorry. Yeah? Excellent. I'm going to debit COGS and I'm going to credit. And if you need to do this, which honestly, I guess I obviously do because I got the first one wrong, post it and prove to yourself that what? It zeroes out, because I can't have a balance in here. It's not really an account that goes anywhere. So what did I just do to my COGS? Increase it or decrease it? Why? Why did I increase it? Yeah, it's a debit type account. So
Does that mean that you undercharged your customers on all the products that you sold, or overcharged?
it means not charge, because I'm going to get it closed out by the end of the month. It means that I underestimated my overhead. Something's gone up in price, or I've used more or something, or I've got quality control issues, or my utility bill spiked. I don't know.
But something cost you more than what you expected.
Yeah, my cost of goods sold went up. What's that going to do to my gross margin? Kick it down, right? Because revenue minus COGS gives you what? Gross margin or gross profit. If my expenses goes up, my margin goes down. (3-11). Again, another COGS and cost of goods manufactured. I'm not going to probably spend time on that because it's there and you can see how to do it in the solutions. It's really plugging numbers into the model again. Yep.
When you got down to the cost of goods sold, you got over 5 overhead. And it says 10,000. So what I'm going, I thought it might be manufacturer applied, which was 9,000, minus the manufacturer actual, which was 8,000. Did that give you 10,000?
Yes.
Okay.
Her question was, where did this 10 grand come from? You have to calculate that. Over or under applied overhead, which is what we've just been practicing.
I just did this through.
Okay. And then the income statement, I'm going to take this COGS number to my P&L, aren't I? That 250? Revenue minus COGS gives me what? Gross profit, or margin either, minus all of my expenses gives me operating income. Good. I think that was good for the practice problems. 318. Harwood Company uses a job order costing system. It's applied to jobs on the basis of machine hours. At the beginning of the year, they estimated 80,000 machine hours would be used for 128 grand of fixed overhead. And then they've got variable overhead of 80 cents per machine hour. What does your, let's see, I was going around, Jordan, what does your formula look like for that? We're trying to figure out predetermined overhead rate, and they've given me the 80 cents per hour for variable, and then they've just given me some data for the fixed portion. Okay, no thank you. Jessica?
So I have, 128,000 plus 80,000 minus 0.80, which gave me, 192,000 estimated manufacturing overhead.
Good. The total line, y equals b plus mx, right? My fixed overhead's 128. My variable portion is the 80 cents times the 80,000 hours. So how much do I think my whole overhead is going to be for the year? 192. And how many hours? 80,000. So $2.40 per machine hour. Plus 3 if you got that. So just put a little plus 3. The next question is, now if you got this wrong, nothing else is going to be correct, but you're not going to continue to take off for it if you used your bad number and applied it correctly. So if you got something else here, but used it to do what you were supposed to on the other two, then you're not taking off points again. So the next thing says, I applied overhead to WIP based on the actual number of hours I worked, which were 75,000. And they give you this manufacturing overhead account, and they give you a bunch of debits. What are all those debits on the left side? Actual elements of overhead. And then they have a question mark on the right, which is what? How much did I apply? Well, Hannah, how much did I apply? But what times what? Even if you got the numbers wrong, you take what times what to apply your overhead? Okay, how many hours did I, machine hours did I work? Right, so 75,000 times my predetermined overhead rate. And I think you said 80 cents, which was the variable portion. But we figured out that in total, right, variable plus fixed, it's $2.40. So the credit side of my WIP, or of my overhead account is going to have how much in it? 180. It's right up here, hon. So if I've got, so I tally these all up, how much is my balance on my debit side? Well, I mean, when I tally up all my debits, it's 184. My credit's 180, so I'm ending that with an over or under applied overhead? Under.
Yes, under, because it's over.
Actual is greater than, yep, so it was under applied of $4,000. So, and then the last thing they wanted to know is how much came into work in process. Well, this is the journal entry, debit overhead credit, or debit WIP credit overhead. So the points there are +1 if you got a credit of 180 here. +1 if you balanced it out. And +1 if you got the part that the other part of the 180 got debited into WIP. If you did not get the right answer in number 1, and so you've got some other number like, 106,000 that you put here and here and got the wrong balance here, you get the 3 points. You're taking a wrong number and applying it correctly. So +3, because you lost 3 points on the first part. And lastly, on the journal entry, you have to use the word under applied to get +1. And you have to have done the journal entry correctly to get +3. Again, if you did everything, got the wrong number in number 1, did everything correct here, and you've got some number here like, 29,000, and you did it all correctly still using that 29, then you get those points because you've already been penalized for the error in number 1. The journal entries +2, what did I just say? +3. And you have to use the word under applied somewhere for +1. So that gives you 10 points in total on the problem. Just a sec, one person at a time. Go ahead. Yeah, that's fine. What else? What else? Go ahead.
So just on number 2, I would have had all the right numbers and reversed them correctly, but I put 0.80 instead of 2.40.
So just what I said, if you used the wrong number but carried it through to make correct entries, then you're only penalized on part 1. You put your name on the top, how many problems you got right out of 10. So 6 out of 10 or 10 out of 10. Oh, I'm sorry.
That should be our last point.
Number 4.
Oh, I guess we're going to make it a 12-point problem. +3 number 1. +3 number 2. +3 on the journal entry, that's 9, and then you use the word under applied for 10. Huh? And then basically it's asking you, what are they asking you, number 4? Explain why it was under or over applied for the year. It was under applied, how come? It could have been the estimation of hours was off. That's probably a part of it. What else? Yeah, who knows? Some of the actual costs were higher than anticipated. For breakfast. Oh, happy birthday. What a shitty way to spend your birthday, huh? Oh. Okay, so +2. Put how many you got correct over 12. You need to, and I'll take a look at number 4, but you need to basically make a logical discussion as to why it was underapplied. Okay, some folks had some questions on the review.
Number 5.
You can just pass them over to Perry maybe in the middle there, and then I'll get them from him. Let's see. I don't even know that I've got it with me. I know I don't. Sure.
Number 5 and number 6.
Okay. Okay, I got it. I'll just let me go get mine. Thank you. Okay, let's see. I don't know where my notes are. Oh, here it is. Great. Thank you. Okay, so problem number. Oh, so we're on the multiple choice?
Yeah, number 5.
If net operating income was 50,000, then the beginning finished goods inventory. And the beginning finished goods inventory for Argyle was what? So I'm going to go ahead and plug in what I've got. Obviously, I don't know what COGS is. That's a part of the issue. And then I've got some selling and admin costs. I'm just going to put those together, the 12 plus the 13. So that's 25,000. And I know that my net operating income is 50. So these are fun. These are like a puzzle. You just have to put what you know and then plug in and solve for X. So I can't solve for X because I got, well, no. Here, I can take 50 plus 25. I know what my gross margin is, right? So I'm going to circle the things I figured out. I plugged in everything, and then I went back up, right? Solve for gross margin. And then, so then therefore my cost has to be what? 25. Okay, great. Now that's going to go over to my other model. What does that model look like where I get COGS?
Beginning, finished with.
Yeah. Do I have that number?
No, that's what we're figuring out.
Okay, do beginning balance finished goods plus cost of goods manufactured. I got that number, 30,000. What the heck? There's like a gremlin in here this morning. 30,000 minus ending balance finished goods. Is 75. So 82, 31, 12.
25,000.
So 25 plus 7 is 32, 60.
Minus 30 is 2,000.
So what I'm going to do, I think, is solve. So my COGS is 25,000. My ending balance finished goods was 7. Yeah, so really what's your X here then? Yeah, I'm solving for beginning. So you're just plugging in numbers. Solve for X. That's it. What else? So am I going to probably give you something like this on the test?
Feasible.
It is feasible, but I'm not. But what is this testing you? You should absolutely be able to do this. You guys have been working these same models over and over. Can you set up the models, plug in the numbers you got, and go, oh, I don't have X, but I can write an algebraic statement and solve for X. Time for one more, I think.
Number 6.
Anybody else want to hear anything else? 6? Is that the consensus? The WIP account of a manufacturing firm shows a balance of $3,000 at the end of the month. And the job sheets of 2 uncompleted jobs show charges of $500 and $300 for materials and charges of $400 and $600 for labor. And I think they want to know how you applied overhead. Okay, so I'm going to set up WIP. And basically what's it telling me, that very first thing? Where am I going to plug that $3,000 in? That's my balance at the end of the month, right? Is this just one big account? No, usually you're going to have a lot of what? Subsidiaries, precisely. WIP 1, WIP 2, lots and lots of these guys, right? Hopefully that means you're producing. And when you tally all them up at the end of the month, they're going to equal this. Yeah? Okay. So what goes into my WIP count? What 3 things? Actual, always say that, actual,
Direct labor and applied overhead.
actual direct overhead, or actual direct labor and applied overhead. Over and over and over and over all day long, actual direct material, actual direct labor, applied overhead. And so they tell us on those 2 jobs that we had $500 and $300 for materials, that we had $400 and $600 for labor, and we know that we applied overhead based on a percentage of what?
Direct labor.
Direct labor. So this times some percentage is going to equal this, isn't it? So it's just algebra. Direct materials, 800. Direct labor, 1,000. Plus, I'm applying my overhead at some ratio of 1,000. Solve for X. That's it. Do not overthink this.
Well, I was sitting there going, they didn't give us the overhead.
Direct materials plus direct labor, and I apply my overhead on some basis that's dependent on labor, and they want you to solve for this. Again, I'm not going to ask you this, but you should know how to do it. It tests whether you understand this flow. I guess I mean, it's this over and over and over, direct materials plus direct labor plus applied overhead. And all of your WIPs have to equal this. And they gave us that. I would come at 9:45. I'll be here at 9:45.
So I don't forget.
Okay, so tell me who needs to have it in the, all right. So you guys need to go make appointments in the Ask Center to take the exam, and I'll put it in there for you. And I'll give you 75 minutes in there. I'm sorry. Just go to them and say, I need to take a managerial test in here. Lisa's going to be bringing it down, and I'll give you 75 minutes. Okay? Make sure you can do those calculations in Chapter 2 as well. That was on the review. Whew. Hard work. Did I get everybody's homework too?